Ladies and gentlemen, welcome to the Motivate Property Podcast. It is Monday, the 16th of February, 2026. Hope everyone out there is having a fantastic week. So guys, this week we are talking about the potential capital gain changes to the Australian tax legislation, right? Now, this is well and truly coming off the back of all the propaganda we've been seeing over the last week. Now, to be clear, the propaganda right now is very strong, guys, right? So something to be a little bit mindful of. I know I've said this a few times over the years. If you guys want to become wealthy, turn off the news, right? As a blanket rule, like I don't generally watch the news. I do see highlighted articles of stuff that is relevant to whether it's social events or property in this case. But keep in mind, guys, right now the media is painting a very, very negative story when it comes to property investment. In fact, one of the articles that I saw on Friday, I believe it was from the Daily Mail, I want to say, or could even be West Australian, something like that. Basically, the article was Anthony Albanese going to war with property investors was basically the article, right? So keep in mind, I screenshotted this and sent it to our entire team. Like, this is an example of the propaganda that is not going to serve you long term if you do pay attention to it, right? But what I want to do, guys, is actually dig into this and just kind of really get to the crux of what's actually happening when it comes to these changes. Now, as you guys know, this podcast is obviously more so catered for property investors. Anyone who wants to become wealthy, successful, all that sort of stuff, that's really who we're talking to. But at the end of the day, guys, this potential change is something that could be quite big. There is a lot of misinformation out there about how this is going to look and work. And so what I want to do is actually just break all this stuff down, right? If you guys have any further questions, comments, notes, feedback, please put it in the comments. But I'll do my best to explain this based on the information that I've got today. And based on the information that I've seen over the last week or so about this topic of the capital gains taxes changing. So without further ado, just to get started, right? So obviously right now, when it comes to Australian property, in my mind, and this is just me being completely, upfront about this, I believe that we are in one of the best countries in the world to build wealth when it comes to property investment. Now, again, when I say that, like there's two parts to what I mean when I say that. The first part is obviously the overall property performance. The second part of that is our tax system. And I think that both of those things go hand in hand and create an environment where in Australia we have some of the best tax policy on the planet. All right. Now, with that said, keep in mind, guys, tax is not the reason why we invest. Tax is a bonus. It's a byproduct. It's an incentive. It's the cherry on top. Why we invest is purely based on growth in the Australian residential market. In other words, when we're buying property here in Australia, we're buying it on the basis that we're going to buy it for $700,000 and it's going to be worth $1 million in X amount of years' time. It's the capital growth is why we buy Australian residential real estate. Now, just again, remember, the reason why it performs so well, Australia as a country, we have a huge amount of land. We've got 30 million people. So in terms of how many people per square kilometre, we are the most sparsely populated country on the planet. We've got less people here than anywhere else in the world. Now, there's some things with that. Firstly, it means that we've got lots of room for growth. All right, we've got a lot of potential here. There's a lot of people that can come and move here and live here. Now, yes, we don't have the infrastructure right now to essentially facilitate those people living here in a harmonious community, hence why we've got all these problems. But in terms of when we contrast that against the Middle East, most of Asia, most of Africa, there's a reason why people want to come here and run away from those countries. Let's just say that, right? Now, secondly, when it comes to the globe, right? When we think about global policy. Now, right now, there are a bunch of globalist elites, and I'm going to call them that because that's pretty much what they're sort of known as today, that practically run the world. And these people are essentially trying to, I'm not going to say this is done intentionally, but what they are doing is they are, let's just say that there is some global migration movements happening and being facilitated by the powers that be. When we look at the UK right now is being flooded with immigrants. We look at Canada being flooded. Australia right now is being flooded. There are many countries around the world. I mean, obviously, Mexicans coming up through the US southern border, they're being flooded. So most of the West right now is being flooded. Now, I'm not going to get into the topic and say that this is intentional. That's a whole other podcast if you guys want to go there. But, there is an argument right now that the West is changing. Now, the reason why I start with this topic and why I think this is actually relevant.
If you're overwhelmed by property investing, you're not alone. Most people waste months researching the wrong suburbs, stressing over inspections, and second-guessing every decision. Motivate Property cuts through all of that. We analyse the data, shortlist the strongest opportunities, inspect on your behalf, and negotiate so you don't overpay. The result is simple: a property that actually performs and moves you closer to financial freedom. Learn more at motivateproperty.com.au.
The only reason why Australia has grown so well over the last couple hundred years is because of, by percentage, how fast we grow as compared to how fast we can build infrastructure. There are more people that come here. It's quicker, cheaper, and easier to make a baby than it is a house. And when we've got such a big landmass and such a growing economy, such a growing country with so many resources, that fundamentally is the reason why Australian property performs so well, and why it's contrasted and performs so much stronger than most other countries around the world. But then, like I said, that's the reason why we're doing this. The tax is a byproduct. The fact that we are in such a tax haven over here is just a bonus on top. It is not the reason why we invest. But keep in mind, guys, this entire conversation is talking about the tax incentives changing. Now, let's break into the tax incentives. Now, what I mean when I say tax incentives, there are two main things right now on the chopping block. The first one is the capital gains discount. So right now, the way that the tax system works, let's say, for example, you guys buy an asset that's worth $100,000. If you guys sell that asset in the future for $200,000, you just made a capital gain of $100,000. In other words, in that financial year, you've basically made an extra $100,000 on your asset. That extra $100,000 is now subject to income tax that goes on top of your taxable income, and that's basic capital gains tax. So it's, in other words, it's in most cases it's considered income. Now, that's not to say if we're using trusts and companies and entity structures that there's ways around that. That's just a very general, broad way of sort of explaining what capital gains tax is. Now, keep in mind the current legislation. If you hold the asset for more than 12 months, your capital gain discount is 50%. So what that means is if you buy an asset today that's worth $100,000 and you held that asset for more than 12 months, and then you sell it for $200,000, so you've still made that same $100,000 capital gain, the discount is if you hold that asset for more than 12 months, that capital gain is halved. So instead of paying capital gains tax on 100, you're only paying capital gains tax on 50. All right, so that's essentially the current discounts. That's the first thing that they're talking about changing right now. The second thing that I'm hearing whispers of, and I'm not saying this is fact, I'm not saying this is going to happen, I'm not saying this is even on the cards, but what I'm hearing right now is potentially on the cards is changing capital negative gearing, right? So negative gearing is you essentially buy an investment property as an investor. Let's just say, for example, that investment property costs $50,000 per year. And you're going to rent it out. And let's just say the rental income you get is $30,000 a year. So the house costs $50,000, but you're getting $30,000 worth of income. Now, that means that right now on that property, you're assuming a $20,000 loss. That loss is tax deductible. Now, yes, there's things like depreciation, or other nice little things you can sort of add into the mix there. I'm not even going to go down that path yet. But just on face value, if the house costs you $50,000, you're getting $30,000 worth of income. That means right now you're holding on to a $20,000 loss. Now, that $20,000 loss under the negative gearing ruling means that the property is negatively geared. It's costing money. It's negative. And you can offset that $20,000 loss against your personal income tax. Right? So that's essentially what negative gearing is. And again, like I said, there are whispers that this is also in conversation. Now, that sort of explains the current system and the way that it works. I think what's probably relevant to really kind of get to the bottom of right now is why. All right? And why are these systems in place? Now, let's just think about the way that we interact with government, right? Now, this is a bit of a heavier sort of way to explain this, but I'll see if I can do this justice. Right now, guys, I believe that there is an argument about what the government's role is. Now, when we think about, for example, the police or the defense force or the fire department, it's pretty self-explanatory what the government's purpose is. It's to keep us safe. But when it comes to providing, let's just say education and public schooling, when it comes to providing, public hospitals, and healthcare, when it comes to provide things for, special needs people, where there's certain aspects of the economy, there's certain subsidies through things like daycare, when it comes to, say, for example, property, right? Now, I personally believe that we need to have a very robust conversation as a society about what we want the government to do and what we don't want the government to do. Now, again, for me personally, this is my personal opinion, just on my own personal political beliefs. I don't believe that there's many sectors where the government should be actually providing the solution. Property, in my mind, is one of them. I don't think the government should be building houses. I don't think the government should even bother trying to build houses. I personally believe that the government should be incentivizing the market to fix its own problems. All right. Now, when it comes to education, that's different. Healthcare, it's different. I do believe there is an aspect of having some free, education and free healthcare for let's just say the guys on welfare. I think, the poorest people in our society definitely need some kind of safety net. But when it comes to property, I think it's very clearly, in my mind, very clear cut, right? I don't believe the government should try and come in and try and build 1 million homes, like what their current policy is. I think that's an absolute waste of time. What I do think should happen is the government should put in either carrots and sticks, incentives and guardrails so that the market essentially fixes itself. That's the way I think the government should operate when it comes to property, right? Now, the reason being, and why I don't think that the government should be providing houses.
Whether you're buying your first home or third or fourth investment property, Motivate Finance Team has you covered, finding the best lender to fit your needs. And here's the truth. If you haven't reviewed your lending in the last 12 months, you're probably overpaying. Banks reward new customers, not loyal ones. We review your structure, compare lenders, and build a finance strategy that actually supports your long-term goals. Whether you're refinancing, upgrading, or building your portfolio, your lending setup matters more than you think. Visit motivateproperty.com.au/finance to get started.
We've tried this before. Firstly, when the government tries to be, the one that solves the problem for us, you got to firstly understand the government's going to have to expand. It means there's more bureaucracy, there's more red tape. Anytime the government expands, just by default, like us as the people, our rights and let's just say that our rights and our sort of freedoms end up, let's just say they get reduced, right? To put it politely. So when the government expands, their power expands and our power essentially retracts, right? So that's the first problem that I have when the government tries to solve any problem. The second problem that I've got is it becomes very expensive to the taxpayer, right? So for the government to go and try and, through tax, go and build 1 million houses, it's going to be way more expensive than if the market just went and did that for itself, right? So it's obviously very expensive for the taxpayer. Thirdly, the quality and standards of those houses are nowhere near what the private market could provide, right? And I know I've given you guys this example on previous episode of the government trying to get into this space and become, like, let's just say a property, let's say they want to open up a property investment division. We will outpace them by every metric. Like zero chance. I can make decisions way faster than government bureaucracy. I can pivot and move and adapt to the market way faster than they ever will. And so when it comes to the overall net outcome for society and the benefit that you're getting from that, from the government building all the houses, nowhere near the standards as if it was going to be the private sector. The difference is, though, when it's the private sector, people will profit. When it's the government sector, in theory, no one profits because it's the government. We all know behind the scenes that people are definitely profiting because that's just the sheer corruption behind the scenes, which I'm absolutely not a fan of. And that's another podcast we can talk. But, at the end of the day, when you think about all of the overall outcomes of the government trying to solve the problem, there's more problems that get created from that, right? And they generally don't end up solving the problem. Take, for example, our current education system, our current healthcare system. Look at most of the systems right now where the government's providing the solutions. Notice how poor it is as compared to the private sector. Now, obviously, with the private sector, the initial sticker value is more. There's obviously more payments and there's more profits to be made by the private person. But at the end of the day, this is an example where I personally believe when it comes to property, instead of the government building all the houses, I believe the government should be putting in carrots and sticks so the market fixes itself. Now, keep in mind, guys, these two laws, these two tax discounts that we're currently getting in capital gains and with negative gearing, this is the government's way of incentivizing investors to be getting into the market. In other words, these are carrots, right? So when the government essentially says, hey, we're going to provide a capital gains discount, particularly if you hold properties for more than 12 months, the first question to pose, well, why is that law in place? Like, why are they actually doing that? They're doing that because it's an incentive. They're trying to force an outcome with the market. They're not trying to solve the problem. They're trying to get the market to incentivize itself. And so what do you have? As soon as the government puts that law in place, and the reason why they've done it is because they want people to actually provide housing stock, rental stock to the market. So for example, before this law was in, and it was just capital gains on capital gains and there was no discount at all, the idea is people were speculating. People were getting into the market, they were investing in property, they were buying and flipping, they were renovating for profit, developing for profit, they were getting in and getting out and taking their money and running. That doesn't solve the problem. Why? Because we actually need rental stock out there for rent. So by the government putting in this law of a capital gains discount after 12 months, what they're essentially saying is market. We want the rental stock actually on the market. So we're gonna essentially give you a discount if you are an investor and you want to speculate. Instead of just selling the house to any punter, foreign investor or a first-time buyer, what we'll do is we're going to give a really nice healthy discount, 50%, if you hold that property long-term, 12 months and above. In other words, that was the government's way of essentially forcing investors through tax, through incentives, to actually hold on to the property long-term and provide the housing market with stock. So now we're having a conversation called the government's about to pull the rug on this. They're about to change this. They're about to remove it. So my initial and immediate thought is, well, this is then the government now disincentivizing, or in other words, removing the incentive to go and do this. Well, how is the market going to respond to this? Well, we've already seen, right? The amount of people, right? Notice, guys, if you have read some of the articles that I've read, notice the comment section, right? Pay close attention to the comment section. And the reason why this is relevant, guys, we have a sentiment-based economy. What that means, when people are confident, they take the money out of their pocket and they put it into the market grows, right? All the charts, boom. When people aren't confident, they pull their money from the market, they put it back under their pillow, and the market's retract and it goes down and the charts fall. That is how our market works. So when we're now sitting in an environment where we have an absolute critical shortage of houses today, we have an absolute shortage, we have nowhere near enough houses for the people we've got, we have a critical shortage of houses, and now we're having conversations of disincentivizing property investment. The government right now is effing brain dead. That's my view. They are absolutely brain dead if they think this is going to be a good policy that's going to somehow correct prices and bring house prices down. No, bullshit. You have absolutely no idea if you think that's going to be the case. Now, sure, if we were standing here in a balanced market, sure, that sort of makes sense to me, sort of. But at the end of the day, right now, we have an absolute critical shortfall of houses and rental stock right now. And by you changing and removing this incentive, just get that you are actually disincentivizing property investment. In other words, less and less people are going to be getting into the market and want to go and invest in property. Why? Because all these other asset classes, from shares to bonds to what, like, these are all going to perform better, assuming that people now, there's less and less reason to get into property investment. All right. So if we think that long-term, this is actually going to make houses more affordable, my question is how? How do you come up with that hypothesis? Like, how is that going to be the net result of disincentivizing property investment? Now, again, this is just purely talking about the capital gains discount. This isn't talking about negative gearing and removing that. That's going to cascade this even worse. And I'll get to that in just a second. But fundamentally, guys, we got to get clear that this is actually a carrot that the government's put in place to incentivize something. If we remove that incentive, right, we're actually disincentivizing property investment. Now, when it comes to the dollar for dollar and how does this actually look, right? So here's something worth thinking about.
If your investment property is being managed, but you're still dealing with stress, vacancies, or tenants who don't respect the home, you don't have a property manager. You have a problem. Motivate Realty runs property management the way it should be done. Clear communication, strict tenant screening, proactive maintenance, and complete transparency so your property stays protected and your rental income stays consistent. If you want a property manager who actually treats your investment like a business, visit motivateproperty.com.au/realty.
So let's say, for example, they remove the capital gains discount. Let's just say they remove it altogether, all right? What would happen? So there's two trains of thought that in my mind. Firstly, there is a chunk of people out there in the market right now who are considering on buying investment properties. There is a chunk of those people, I'm not saying all of them, but there is going to be a big chunk of those people that now don't see property as lucrative and therefore won't get into the market and supply the houses that the market needs. So there is a chunk of people right now that will see these law changes and think, no, yep, see, that's the end of property investment, and therefore I'm going to try and invest in shares or bonds or something completely different, right? Not sure of the percentage, but there definitely is a percentage. There's also a big chunk of people who are currently investing in property, and I'm one of them. I own multiple properties. If they remove the capital gains discount, then I'm never going to be selling them, right? In other words, you're essentially incentivizing me to never sell and just continue hoarding them and continue holding on to them forever and, pass them on to my kids and try and avoid the inheritance tax when that comes down the end of the day and, try and avoid it and kick the can down the road and make it my kids' problem. The point is, though, if we're trying to, force people to sell all these houses right now so we've got more rental stock and more stock to essentially purchase, well, there's also some flawed thinking in that. Because you've got a big chunk of people who won't do that anymore because the discount's now gone from 50% to zero. So why the hell would I want to now go pay twice the amount of taxes when I can just hold on to this and keep making money long term? So you'll notice that the market will reorientate itself. More and more people will want to have that hoard mentality. And we're not actually supplying the market with any more houses than we otherwise would. So that's the first problem. The second problem is we're also still talking about the same properties that are already in the current market. Now, what I mean when I say that is we have a seesaw. Supply on one side, demand on one side. The market's where the market is. We've already got an undersupply, right? So demand is much higher than where the supply is. It's not about how many houses are in the market because they're already in the market, right? We've already got X amount of tens of thousands of homes in Australia. It's about how many new houses are we adding via construction and how many new people are we adding via population growth, net population growth. So again, if we're just going to assume that by putting these taxes in, it's going to force all these extra people to now sell their properties, which fucking not, firstly. But then secondly, we now just assume that all these new houses being added to the market is all of a sudden going to make houses more affordable. Guys, you're dreaming. This is not how the market works. This is never how it's worked. And so again, all of the logic behind the arguments of changing this, in my mind, are all completely flawed. They are all, it's complete disinformation that it's not even funny. Now, we haven't actually dealt with the underlying problem here. The underlying problem is the only reason why we're even having this conversation is because Labor can't balance the fucking budget. So if we're going to sit here and watch Jim Chalmers piss billions of dollars up the wall, Labor expand themselves, this huge socialist government that's just going to continue expanding itself to provide more services to the people and have to keep bloating itself, completely overspend the budget, more money than we've got, and then the inherent reaction is to now blame property investors and make property investors and their tax incentives responsible to get us out of the budget. We've completely missed the point here. All right. And like I said, guys, if we were sitting in a balanced market where there's a healthy amount of properties on the market, there's a healthy amount of buyers, there's a nice healthy balance here, there is a lot of negotiation back and forth, and and I'll give you an example, right? An example of a healthy market is when a buyer and a seller transact and they both walk away thinking they've got a win. That's a really good indication we're in a healthy market, right? Right now, most people who are buying houses don't feel like they're getting a good deal because they're buying at $850,000 when 5 years ago it was $450,000. And most sellers are walking away with a pretty bloody big smile on their face. And so again, this is just a symptom right now that we're not in a healthy or balanced market. We're in a critical undersupply. So even if we were in a balanced market, there is an argument that these changes may be relevant, maybe. But the fact of the matter is, all of these changes, the end result is disincentivizing property investment. In other words, it's removing some of the incentive for property investment. So we're in a critical undersupply. The government has overspent because it's bloated itself and it's making poor policy decisions. Its knee-jerk reaction is to remove the bonuses and incentives for property investors to provide houses to the market. And somehow we just think magically this is going to make house prices cheaper. I don't know about you guys. Even the fact that I just said that out loud makes me feel like I'm going insane. The fact that we have politicians and bureaucrats on the East Coast who are making these decisions and they have zero experience in what they're actually talking about and the policies that they're considering. We've got all of these different bodies around the country that are jumping up and down. I can see all of the ones in the property investment space, Property Council, PIPA, all these different bodies that I'm seeing emails, every day of them jumping up and down and pulling their hair out over the fact that the government's making these decisions. And yet we look at the mainstream media and it's Albanese going to war with property investors. All because his government's overspent and fucked the budget. This is more reason why I believe this is just a freaking movie. This is absolutely insane that these people are getting paid six figures to make these decisions. They've got no idea what they're talking about, got no idea what they're doing. They've got no idea of the chain reaction effects it's going to have in the actual market. And they just think that, oh, this is the best way forward and best way out of this. It is absolutely freaking insane that we are living in this world right now. To summarize, guys, I don't believe that this policy is going to pass. I don't. I genuinely don't. That might be a little bit of naive optimism, but I'm hoping that the Labor government can actually see the fact that there is such a shortfall supply of housing that any of these changes, all it's going to do is just make property investment even harder for people and less incentivized to do it. I simply do not understand how they can say hand on heart that the mechanics is it's going to make house prices more affordable. I just don't understand how they can say that. How this helps for us and what to take from this. So, to be clear, guys, let's say tomorrow they remove the capital gains discount. So what? Let's say they remove negative gearing. So what? All it's going to do is make housing more expensive. Why? Supply and demand, baby. There are less people that want to do it. We still have the same 500,000 people a year coming into the country, net population. If we remove the capital gains discount, there will be less and less people that want to get into property, and there's going to be way less people that actually end up selling those properties to the market. Right? So we're not solving the supply chain issues. Now, secondly, when it comes to negative gearing, right? Like I said, this is more of a whisper than anything, kind of credible. But let's say they do remove negative gearing. And let's just say that you can't claim that $20,000 loss against your taxable income. Well, physically, when it comes to the amount of money you can borrow, you physically can't borrow as much with the banks if they remove that. So that means that the average investor who can, let's just say, borrow $1 million can now only borrow, say, $6,750. So the point of the story is if they remove negative gearing, automatically people can borrow less money to invest in property. All of a sudden, there's less people who can actually afford to invest in property. There's less properties and less stock and less supply of houses. So no matter which way you want to cut it, if they remove the capital gains discount and they remove negative gearing, or they remove the tax benefits, incentives, any kind of discount that they're giving to property investors, the overall net result is there are less property investors that will do this. The net result of that, there are going to be less houses available on the rental market. The net result of that, house prices go up, not down. So if they go and do this, guys, I want you to know from me, I will be buying more houses that I can get my hands on. If they remove the CGT discount, if they remove the capital gains, not the capital gains, the negative gearing benefits, let's say, I'm going to be buying even more houses because I know the house price is going to be rocketing even faster. I'm going to be even more aggressive than I am. And guess what? I'm never going to sell them. I'm just going to keep hoarding and keep holding and pass them on to my kids and teach them how to do the exact same thing. So I hope today, guys, that's helped answer some of your questions, some of your concerns, some of your thoughts. I'm not going to get stuck into any of the more political debates for now, because I know that I've sort of bored a lot of you guys with that over the last sort of year or so. But this is one of those topics I just couldn't hold myself from talking about, because I've had multiple people hit me up, send me messages and send me their concerns about what this actually means for them and what it means for their portfolio. To summarize, guys, they make these changes, less and less people will want to invest in property, and the prices continue to grow. Hope they helped, guys. Any questions, comments, please feel free to leave them. Love you all, and we'll see you next week.